let's turn our attention to macro. For one, we will get a peep into what the government might do today when the Prime Minister Narendra Modi addresses the Lok Sabha at 4 p.m. In response to the President's address. Chances are he's going to focus a lot on agriculture, with the monsoon prediction coming subpar from the meteorological department. Mr. Narendra Modi has presided over a cereal wonder in Gujarat, as Dr. Ashok Gulati called it. So let's get Ashok Gulati himself on what we can expect from Prime Minister Narendra Modi at the centre on the agricultural sector. Dr. Gulati, thank you very much for joining us. There could be a monsoon threat and therefore a grain threat. We do not know yet. But what's your own assessment? Is there a threat to food inflation because of the monsoons this year?
You know, normally if the monsoon is bad, and we are expecting at least 7% below normal, the growth in agriculture may be less than half of what it was in the previous year. So from 4.7 it may collapse to less than 2%. Now that means production will be hit. Now if we don't take action well in time, it can lead to another spiral of price increase sometime in October, November. That's the time when the demand starts peaking up. So the question is which commodities, which regions, and how they are going to be impacted by this, and prepare a plan well in advance. And that's where my focus is at present, to look into all the details.
Okay. So exactly that, next question. What, according to you, should be the first 4-5 steps that the government has to take on agriculture?
You know, as far as the prediction today is concerned, that okay, Northwest will be deficient, maybe even 15% below normal. But that's an area, Punjab, Haryana, Western UP belt, which is quite irrigated tract. Second, it's a food grain belt, and luckily for India, we already have much more stocks than what we need even for our full rollout of the National Food Security Act. Although states are not ready for the full Security Act to be rolled out because they have not identified the beneficiaries which they were supposed to do by 5th of July. Now, given that scenario, my first submission to the government would be that be prepared to liquidate at least 10, 15, 20 million tons of excess grain stocks that FCI is already loaded with. And that will bring a very sobering impact on the food inflation. Now, at what price it needs to be released, how it needs to be released, you can have an e-auction, last MSP plus 5%, you know, then you can really keep it cool. Now remember, cereals have the largest weight, but the rate of inflation in the last 3 years or 5 years, if you look at, it is the highest in fruits and vegetables. And that's where the worry is. And that's where we have to start counting our onions unless we are caught really unaware on that situation. If Maharashtra doesn't get good rains, you can have a problem of onions. And the supply lines are very fragmented. Some are monopolized by a few and so on and so forth. I think we have to think in terms of, you know, in the medium to long run, we have to think of building supply lines well. But what do we do in the short run? The short run solution, if the domestic production falls below what is expected, then I think we have to think in advance of lowering import duties, because that's the only way you can augment domestic supplies. And from that point of view, I think most of the vegetables and fruits have an import duty currently of 30% plus. Certain commodities go even up to 50% or so. So in a calibrated manner, you can lower the import duties, augment the domestic supplies.
Okay.
That's one part of the game. The other would be, this belt is also pulses and oilseeds belt. And pulses are already open for imports at zero import duties, so you can't do much in that, except if the government wants to intervene, can put some advance orders. Remember 2-3 years back, the tour prices had gone to 80 rupees plus, and and you have to think of the yellow pea from Canada or others. So if I was a trader, I would be ready to import well in advance for that.
Dr. Gulati, but lowering of good morning. Lowering of the import duty is something that we have spoken about in the past as well. But politically, how viable could that be? Because if import duties are lower, there will be this big conflict between farmers and the consumers, etc. So politically, do you think that could be viable?
You know, you have to think about why these duties are so high. If pulses can come at zero import duty and edible oils worth more than $10 billion that we are importing, 60 to 65% of our consumption is imported. On crude oil, we have an import duty of only 2.5%. And on refined today 10%, then why do we have import duties, let's say on chicken legs at 100%? A cut pieces it is 100%, on skimmed milk powder it is 60%, on apples it is 50%, on most of the vegetables and others it is more than 30%. You have to remember that there are lobbies that operate, and that's how many of these aberrations take place. Temporarily, if you want to handle, you have to look at the biggest lobby than the consumer lobby. If they are hit by 15%, 20% higher rate of inflation in food, then will that adversely impact the government, or taking on one or the other lobby head on, will that be better?
Okay.
So it's all a question of trade-offs.
Dr. Gulati, a slightly longer term question. According to you, what should be the first 3 or 4 steps that the government, the Modi government should take for the entire composite problem of agriculture and food, considering that we are still battling with near double-digit inflation in food as a whole for what, 5 years now?
You know, you remember last 5 years of UPA-II, food inflation is 10.3% per annum. But UPA-I was 5.9% per annum. And what was the rate of food inflation in NDA? It was 4.1%. So from 4 to 6 to 10 plus, now there is something wrong that has happened. You have created a huge demand through deficit financing and these welfare policies, so-called, doles that you have been distributing. And it's not that the agriculture production has gone down. Agriculture production is coming from one record level to another record level. But the demand is increasing much faster, one because of loose fiscal policy, I would say, rather than monetary policy. So one is you have to contain fiscal policy. But at the end of the round, your question is, in the long run or medium term, what do we do? The solution lies in augmenting productivity and building efficient supply lines. Augmenting productivity will need a lot of investment in water. And that way, I would say the new government is very clear on how to prioritize the issues regarding water development and water management. I've yet to hear any Prime Minister or even earlier Chief Minister saying, per drop, more crop. If that is the slogan, we would see how much money is put into that and how much practice. So that will increase the productivity by 50 to 100% and will give you food security for the next 20 years. But as the incomes rise, the perishable demand, the demand for fruits and vegetables, milk and milk products, and meat and fish and eggs, that is going to increase much faster than the cereal demand. Now, that requires, besides the productivity augmentation, value chains. The supply lines are very, very weak. The way we tried to build in the milk sector through the Amul model, that model needs to be replicated 20 times bigger in fruits and vegetables and meat and fish sector. Now, that is missing. Government has to come in, private sector has to come in, and unless the two join hands and make mega investments, and that will require streamlining the back end.
I'm sorry to interrupt you, but I just have one last question before we run out of time. Many of Narendra Modi's comments have been met with a little bit of skepticism by economists. So, for example, he has explicitly promised in all his public rallies that his government would give farmers a profit margin of 50% over and above the total input cost, and that, of course, will in effect be inflationary. So, what is your view on how, something like that, if it comes through, how could that actually impact inflation?
There is need to interpret that correctly. 50% profit is not saying that the MSP will be 50% higher than your cost. That distinction has to be made. How do you increase profit? You can increase productivity. Productivity, when it goes up, the costs go down and the profit margins increase. So if you concentrate on water and better technologies, then you can increase productivity and increase profitability, and you can take it to 50%, and that's the right way to do. But if you think by raising MSP or by raising prices, then you are going in the reverse direction. More inefficient you are, higher the price you get, that's a disaster for the country.
Fair point, Dr. Gulati. Actually, we have a lot more questions for you, not the least about the Food Corporation of India. We're out of time at this point. We'll postpone that to a later day. Thank you very much for joining us.